In today's video, I want to show you some strategies that you can use to get funding for your small business or maybe for your personal entrepreneurial endeavors. Either way, it's going to take funding. It's going to take working capital. You know just as well as I know, most people cannot accomplish anything as entrepreneurs or as small business owners if they don't have the right funding. But before we get started, I want to remind you to hit the like button, to make sure that you subscribe to our YouTube page. This is a channel that's full of content teaching you all the ins and outs of starting and structuring businesses, ministries, creative real estate investing, and everything in between. Which, by the way, if you don't know, my name is Ramon Preston. I am the CEO and I am the chairperson for RP Capital. This is a private equity firm that is committed to local investing that makes an impact. We specialize in 3 areas: advisory services for your finances, for your business, and for your investments. And our team does an extraordinary job to see to it that even if you just need a strategy call to figure out what direction you need to go, we make ourselves available. So inside of the description, there's a link, there's some contact information. Feel free to reach out to us at any point to get any information we have to help you along the way. With that being said, let's talk about how to get funding. Now, before I share with you some high-level strategies that you can use to get funding, I want to differentiate the type of funding that you're going to pursue, okay? There's going to be conventional funding, and then there's creative funding. I lean more towards the creative side, whether it's with funding, whether it's with real estate, whether it's with business acquisitions. In life, I'm just more of a creative person, and I'm not a creative person by choice necessarily. I became a creative person by force. You know why? Because when I first started my business, when I first started investing in real estate, when I first launched my private equity firm, guess what? Each of those times, I didn't qualify for conventional funding. So it forced me to get creative. And most likely, you, like 99% of the entrepreneurs and small business owners, are probably going to have to lean towards that. However, we still want to make sure that you understand what the conventional side of funding is. And this is easy. We're talking about going to a bank. We're talking about going to a credit union. We're talking about reaching out to some online institution to see if you can qualify for a credit card or a line of credit. In most cases, you don't, unless you are a personal guarantor and you have a credit score of at least 650 to 700 at minimum. It may be 7 to 750 in most cases. Some institutions don't even care if you have a 700 plus credit score. They want to see a credible track record, meaning that they want to see W-2 employment. They want to see a couple years of tax returns. They want half your arm, 3 of your toes. I mean, the list goes on and on. But there are people, maybe you, maybe not you, who do qualify for conventional funding. So if you're looking to get funding for your small business, you can always go to your local bank. I always encourage my clients that I talk to, even if they are thinking about going the creative route, just go the conventional route to see what some of the underwriting criteria is, meaning that you can schedule an appointment with a local bank or with someone, not the tellers of the bank, but someone in the commercial banking or lending side of that institution. And you can just ask them, what is their underwriting criteria? When I tell this to clients, most of them say, I never knew that. Yeah, you can literally just schedule an appointment with a commercial banker, someone in the lending department. We're not talking about a teller. We're talking about somebody who does that part of the business, okay? And one of the questions you're going to ask them is, what is your lending or underwriting criteria? What is the list? What are the things that I need to have in place? They will literally tell you what you need, what you don't need, what's important to them, what's not important to them. I'm almost never recommending you to start out with this business plan. I know people always want to go to this business plan route. It don't matter. I don't care how polished your business plan is. I remember one of the first times I went into our local bank to pursue funding for one of my first companies. And I was told the same little spiel by a consultant who said, yeah, you got to have this business plan. And they worked with me to put this business plan together and gave me all this advice. And I had like 30 pages of a business plan. And literally, the commercial banker took it, skimmed through it, looked at 2 or 3 pages of the numbers, said, we'll get back with you. They told me they sent it to corporate. A week or so later, called me back and said, yeah, you don't qualify. So the business plan, although it was polished, although it was put together, it means nothing. One of the best things you could do when it comes to the conventional loans or funding opportunities is just ask them what their underwriting criteria is. What do you look for? They'll tell you, okay, you have to have an entity that's been in business for this amount of time. You have to have a personal credit score of this. Your business needs some type of line of credit. You need to generate this amount of revenue. You need to have this much net profit. They will give you what their underwriting criteria is. But again, for me, I learned very early on as an entrepreneur that this side of the spectrum, it just don't work. Okay. Now, the creative side of funding, we're talking about private money lenders. It could be a private money lender. It could be a hard money lender. I mean, there are people who are considered private money lenders and hard money lenders for small businesses, not just for real estate backed deals. Okay. So we know in the world of real estate, there are private money lenders, there are hard money lenders, and these are individuals who loan money to you based on the qualification or the criteria of the property, the value of the property. And in most cases, they're going to have a first or second lien position through a deed of trust. That's the security instrument that they're going to use to secure that loan against. So in the event that you, as the borrower, default on that private money loan or that hard money loan, they can foreclose and take that property. So in the case of a business, it's a little different. There are different dynamics, but it is doable. It happens, okay? You can also have investors or maybe strategic partners, okay? This could be a form of an exit for you where there's a percentage of equity that you either give up or at least put up from your company just to acquire the money that you need to get the working capital. But just to show you, look how quick we filled this side up as opposed to this side. So you have a higher chance of getting funding creatively than you do conventionally. Either way, there are things that you need to do to properly position yourself. Okay. Now, what are those things that you need to do? I believe first and foremost, and I'll give you a couple. I believe first and foremost, what you need to do more important than anything is make sure that you have the right structure. Okay. Make sure you have the right structure. Listen, if you look at the biggest banking institutions in the world, the biggest investment firms in the world, they all have this thing called a holding company. Now, again, your main source of revenue for business may not be a holding company. Your main source of revenue for business may be an operating company that you sell a product or that you provide a service. That's fine. But remember, we want to put you in the best position so that you can get funding, even if it's conventional or creative. Both ways, you're going to realize that having this structure set up and then putting your operating company under it, it automatically validates you. It automatically increases your enterprise value. It just puts you in a different sphere of operation, because this is more of a sophisticated, stabilized structure that gives you more leverage, more purchasing power, conventionally and creatively. So I would say, number one, you want a structure. Now, if you already have your operating company set up and you don't have a holding company, it's not that big of a deal, especially when you know what you're doing, to restructure your organization by setting up the holdco and then making sure that you transfer the ownership of your operating company from you to your holdco. That's a easy, and I hate to use the word easy, but I'll say it's not that difficult of a transition. Okay, so structure number one. The next thing, once you have the structure set up, is, and this is very important, systems. Because I can tell you right now, if you have a holding company and you have an operating company, and then you put systems in place, we're talking about using technological platforms that house the data, the information for your sales, your marketing, your admin, your operations, your finances, which you don't need a whole lot of sophisticated technological systems for this. You might need maybe 2, at best 3. And once you put the systems in place, now you can start creating processes, meaning that you can start tracking the steps that you use to measure results in all of those areas: sales, marketing, admin, operations, finance. Just having that type of structure, just having the systems and processes that I mentioned, puts you in a whole different category when you are approaching a conventional lender or a creative lender. Because now you are saying to them, outside of this 40-page business plan that you have your structure in place, you have your systems and your processes, and everything can be quantified mathematically because you've done your due diligence. Now, if you don't know where to start with any of this, but you know it sounds like something you need to be doing, click the link in the description. Again, my team and I, we offer strategic advisory services. This is what we do on a day-to-day basis. This is what we've done for, at this point, hundreds and hundreds of clients who we've worked with personally to start, structure, and help them scale their businesses, even their ministries and their income streams. And we want to help you. So click the link in the description. Don't forget to like, to share, leave a comment. Let us know how videos like this are bringing value so that we can continue to share content with you to help you take your business, your finances, your wealth building dreams to the next level. I'll see you in the next video.